Hi. So anyway, we will be starting in about 5 minutes time. We will be starting at 8:05. So yeah, anyway, my background is not a virtual background. It is a real background. So you might probably hear people saying, yeah, you might hear people talking as well. I hope you all are able to hear me. Okay, we have four of you. I think we should have more. Let me just get more people to come in. Okay, we will be starting in about 3 minutes time. Anyway, is my background too noisy? If it's too noisy, can you just let me know? Most importantly, you must be able to hear my voices later on. All right, so just to make sure that I do not distract you guys, I'm actually having my dinner. So probably later on I will off my camera lah, so that you all don't see me, having my dinner halfway. All right. Right, but anyway, today is a really interesting company. Okay, as usual lah. All my companies are all very interesting one. But today this company I would say that it's actually one of the better company that I actually researched for Singapore company. So yeah, do actually stay tuned to what I'm actually sharing later on. So once again today, yeah, change of environment, but of course a new environment would means uncertainty lah. We have a special background effect. We have people eating, but it's okay. Okay, and for those of you who are watching on our Facebook Live, I think we have 16 of you. So very importantly, make sure that you are able to hear me loud and clear. So once again, just to check, if you are able to hear me loud and clear, can you just type in, 717, 717, if you can hear me loud and clear. Okay, thanks, Winston. I see your response. All right. Thanks, Lily, as well. Okay, Jared, thank you for your response. Okay, so we will be starting in about 30 seconds. So we'll be starting in about 30 seconds. Yeah, so make sure that you are able to hear me loud and clear. Wow. Thanks, Huang. Okay, and I think let's get started. Okay, let's get started right now. Okay, I'm going to record it as well. Okay, so we are going to get started. So first of all, very warm welcome to everyone for our Buy or Buy series this evening. So today we're going to talk about this company called Union Gas Holding, and I'm pretty sure just by looking at the logo, we should be very, very familiar with it. So if you have seen this company before, you know exactly what it does. Can you just type in a 111 into the chat box, into the chat group? Right, and of course, okay, if you like what we have been sharing with you so far for our Buy or Buy series, okay, do make sure that you actually subscribe to our YouTube channel, all right, whereby you can actually see all the Buy or Buy series, RCUI series as well. And something new that we actually come up with is that, right now all the videos will be actually live on our Ultimate Investing Facebook group. And very importantly, if you want to receive our PDF copy of the slides today, all you need to do is very simple, help us to like, share, and comment the word claim if you would like a copy of the PDF of the slides that I'm sharing today. So once again, if you want to have a copy of the slide, just help us to like, click the share button, and then comment claim, and then you will be able to receive the PDF copy automatically. Right, and of course, I'm going to start with a disclaimer. Okay, once again, what I'm sharing with you is purely for educational purpose. Please do your own due diligence, all right, before you actually do any investment on your own. And of course, today, the format that I'm going through is definitely using this big profit, okay, whereby I'm going to talk about the background, industry, the growth, and we're going to compare it with some of the competitors. We look at the risk and the opportunity. And last but not least, we look at the financial fitness of this particular company. So starting with the background of this particular company called Union Gas Holding, right? So in this company, they actually have 4 different companies. So mainly you have Union Energy, Union Gas, UGas, and Union LPG. So these are just different companies that serve different purposes. Okay, don't have to know what they do, but later on, okay, let me share with you the background. So basically for this company, what they are doing is they're actually selling this LPG, CNG, as well as diesel. So the blue color can that we are all familiar with, that is the LPG gas. All right, so at the second point over here, they sell mainly bottled LPG cylinders in Singapore, and they also sell and distribute diesel to retail customers at its fuel station, right? So they actually have a fuel station in Singapore, and of course, last but not least, they actually transport, distribute, and bulk sell diesel to commercial and industrial customers. So this is a quick background, but we are going to focus into their 3 main business segments. So starting with the first one, which is their retail LPG business, all right, whereby we actually see their lorries everywhere we go. Most of us, some of us, our home, are probably using a gas can like this as well. And of course, the second business that they do is they actually are in the CNG business, all right, which is the natural gas business. So some of the cars in the past and some of the taxis uses this CNG. It's like a kind of natural gas, that's mainly used for car. And of course, the last one, which is something that is relatively new, they are also in the diesel business. So later I'll also share that there's actually more and more diesel car in the road out there. So this is actually a growing market and also a growing business segment for this particular company. So very interestingly, this is something that I actually gotten from the website of Union Gas. So they mentioned that they actually started distributing health products and household products as well. All right, so I think there's actually this particular brand called Dr. Oats. Dr. Oats. All right, but I would say that that is a very, very small segment that probably they're just testing out, going into retail product and household product. So I'm not going to touch too much onto that particular area. So let's start with the first one, which is the retail, liquid petroleum gas business. So as you can see, where is their target audience? Their target audience is basically our household in matured or older estates, as well as landed housing in Singapore. So most of the landed housing, they do not have the gas piping that directs to their house, and most of them they actually uses the gas cylinder. So at the bottom, their small cylinder are also sold to dormitories and also certain industrial customers, as well as small cylinders for corporate as well as private events. The second business that they are in is actually the CNG business under this particular brand called Synergy. So this particular gas station is located at Old Totak Road near Bukit Batok and Jurong. So for those of you who stay near, you probably have seen this, very, very unique gas station before. And of course, for them, for this particular CNG business, they actually have 14 dispenser with 2 nozzles each. And this is actually open to the public for 24 hours. And the last one is something that they actually started in 2015. So they started to distribute diesel to retail customers. That means, I know. So most of us, when we thought of, pumping diesel, we thought of going to the gas station like Caltex, Shell, SPC. But what they offer is basically similar, except that the price is a lot cheaper. So later, I'm also going to share with you, the comparison between the big oil companies as well as Union. So currently at the same place, which is the Synergy, they actually have 5 diesel dispenser with 4 nozzles each, and they have a 220,000 liter underground storage tank, which actually houses their supply. So not only that, they also have trucks whereby they transport, distribute, and bulk sell diesel to their commercial customer as well. So in terms of the percentage revenue contributed by each business segment, you can see that, based in 2016, the majority of them actually comes from the retail LPG business. And up till now, it's still the majority, it's still the main business, which is the retail liquid petroleum gas. But you can see that for the CNG portion, which originally back in 2016, it was 26.3%. Right now, it's as small as just 2.5%. Okay, and of course, the reason being is because, the number of CNG cars in Singapore is almost disappearing, which later on I have a statistic to show you that they are almost extinct. And of course, for the diesel portion, you realize that they were 14.3% in 2016, but it has almost doubled over the last 3 years. So that is definitely something that is a good business segment for this particular company. So that is why we want to place extra emphasis on the retail LPG business, okay, as well as the diesel business for this particular company. Now we talk about the whole industry as a whole. So let me share with you. So for example, for the new home owners out there, when you actually gotten your new house, you got to make a very important decision. Whether does your home, you want to go for a tile gas, which is the piping that is already built up, or you want to choose the liquid petroleum gas, which you can actually get it from Union. Okay, so Union is actually one of the supplier for LPG. So in the market, there are actually multiple companies, multiple brands as well. Right, so you have to make a choice. So let me share with you what is the difference between, the town gas, which is actually by city gas, and of course the LPG. So if you are going for the pipe town gas, so of course over here they mentioned that it's going to be reliable and continuous because the pipe is already inbuilt. So which means that you will never run out of gas in that case. And of course it was mentioned to be safer and convenient, right? Because the pipe town gas is actually lighter. Yeah. So even if there is a leakage on the town gas, as long as your windows is open, it will automatically dissipate off, as compared to LPG, which is relatively heavier. So in the event whereby there's a leakage of your LPG, it might be a little bit more troublesome in that sense. And of course, for those of you who knows, when you have a pipe gas, when you have a canister, you need to find a place to actually put it. So some of you probably park it under your stove, or you actually find somewhere in your kitchen to park. But if you are using the town gas, you don't have to worry about the canister. You can basically have additional space for your other needs as well. So that is, I would say, some of the key benefit when you are using town gas. Of course, safety, less clutter, and of course, it is reliable and continuous. So then a lot of people will be thinking, so why would I want to go for this LPG, which is the canister? So I would say that the key advantage over here is cheap. Okay, so we compare town gas as well as we compare to the canister, which is one of the product by Union. LPG is definitely cheaper. All right, so if you are heavy usage, that means you actually cook a lot, you use the gas a lot. So if you want to save money, then it's better off to go for the LPG. So as one of the largest LPG supplier in Singapore, all right, so Union Gas has the largest sales team and delivery vehicle fleet. right? So what happened is that there's also a potential acquisition of more assets and business. So they're actually expanding this particular portion as well, which later on I will also touch on it in terms of the risk as well as the opportunity when it comes to this acquisition. And right now we want to talk about some of the peer comparison. So very interestingly, I got this actually from the internet. You know, I actually go and look for the classified and I managed to find quite a number of their competitor that is located in Singapore. So these are all the retail sales of liquefied petroleum companies in Singapore, and most of them are actually private company, right? And one of them, Gas Private Limited, is already acquired by Union Gas. So you can see that actually for Union Gas, they definitely have more monetary power, they have more financial power because they are actually a listed company. So probably along the way, they will probably acquire more and more company as well. And as what I've mentioned just now, all right, so if we also compare why the diesel business is something that is attractive, right, for Union Gas, is because if we compare the prices of Caltex, Esso, Shell, SPC, Sinopec, Smart, as well as Union, which is the Synergy, you can see that the prices is relatively cheaper. Okay, the prices that they are actually offering is relatively cheaper. So if let's say today you are driving a diesel car, probably you would also want to, drive over to Synergy or Smart, which is another private company that is providing diesel. So that would be a better choice as compared to the, going to the normal fuel station. Next up, okay, I also want to share with you about this particular company, which is Smart Energy Private Limited. So as we mentioned just now, this company is the diesel as well as CNG business competitor for Union Gas. So they have actually 3 different stations, one in Mandai, one in Serangoon North, and the other one, they have 2. Yeah, which is these 2 locations. As compared to Synergy, which they have only one at Old Toh Road. So in terms of competition, definitely there will be competition. But in terms of the demand right now, I would say that the demand actually oversees the supply. So which means that you can see that even though there's this particular competitor, but in the market, there's still so much, there's a lot of huge demand for it. So that is why it is still pretty profitable for Union Gas in this particular diesel business. Next up, we want to look at the growth of this particular company. What is the potential growth? So we can see that, okay, there is a 39.8% revenue growth from 2018 to 2019. So this 39.8% actually contributed mainly from these 2 areas. The first area is the liquid petroleum gas commercial. That means instead of just supplying to household, which is the retail, now they are offering to commercial, which is mainly your hawker center, your big restaurants and all the other commercial usage that actually uses a lot more. And of course, for the second one is actually the diesel that they actually sold to retail customer. So these 2 actually is one of the 2 main growth contributor for this particular company, which is something that we also want to focus a lot more as well. And you can see that looking at the LPG commercial, because they actually bought over this particular company, UGas, and because of that acquisition, you can see that in this particular area of commercial LPG, there was a jump of 302%, from 5.58 million in 2018 to 22.43 million in 2019. So this particular increase is mainly contributed to the acquisition that actually took place last year. And so I also wanted to share with you, in terms of why I find that there is more potential growth in terms of the diesel business. So I actually took this annual vehicle statistic based on 2019. So we can see the number of diesel cars from 2009 to 2019. There is definitely a very, very huge increase from 43 diesel car to 18,000 diesel car. And of course, we can also know why their CNG business is not doing well. It's because the number of petrol CNG cars from 2006, it actually dropped all the way now to about 250 only. So that is definitely a drastic drop. So this company, they actually managed to shift, from a declining business, they convert it, they use the same infrastructure that they actually have, and they actually convert into something that is growing, that is doing relatively well. And I think moving forward, diesel cars should continue to increase, okay, because of the relatively lower prices in the diesel prices. So that would attract more car buyers to actually go for diesel. And of course, okay, we can see over here the diesel to retail customers, there's actually a 19.1% increase from 2018 to 2019, right? And at the bottom, they actually attribute it to an increase in sales volume. So like I said, moving forward, I would say this number should continue to remain. The growth should remain as a double-digit growth in terms of the diesel business. So right now, okay, we also want to touch on the risk as well as the opportunity of this particular business. So just to share with you, back in 2018, Union Gas acquired UGas, Sam Gas Supply for $11.6 million. So in this particular acquisition, all right, you can see that out of this $11.6 million, in fact, this actually is part of UGas as well as the Sam Gas. But let's look at the underlying, okay? For the UGas portion, total, they actually paid about coming to 9 over million. But this 9 over million is not paid in cash, but it is actually split in 6.44 million paid in shares and 2.76 million paid in cash. And if we look at the share portion that they actually paid, is actually sold at an issue price of 26.47, right? So I think to me that is definitely a good news, okay, because in a way, this particular acquisition is actually packed at this particular price, which is 26 cents. So for the business to actually continue, they also want to make sure that this business will continue to grow and outperform this 26 cents per share. So later, I also want to share with you at the bottom, you can see that this particular transaction, right, okay, is actually flagged as an interested person transaction. Okay, this is a little bit complicated, but let me explain to you, it's because, right, this particular UGas, okay, is actually also owned by part of the Union Gas as well. So what happened is that, so for example, in this particular business, okay, so you have the father that actually set up this particular UGas and Union Gas. So subsequently, what happened that they actually took a small part of the business, they actually go and list it, right? So there's actually still a portion of the business that is not listed. So what happened is that this UGas actually comes from the parent company. So which means that all of them actually are owned from the same family, right? So, it's like your brother selling your sister one of the company, so there's a lot of conflict of interest. So that is why when it comes to this kind of transaction, if it is actually paid in cash, if the amount is relatively huge, there might be some, issue. People might flag this as some issue going on. They might be trying to just extract cash from the listed company. So when I actually see this, I realize that most of them are actually packed with the share of Union Gas. So which means that actually, they also want the business to do well, even though they actually bought over the business from the same family. So as you can see over here, okay, the CEO, Teo Hak Piang, so this is actually the son. Okay, so the father actually founded Union Gas. So now the son is taking over as the CEO. So they actually mentioned that there's a steady growth in 2 out of its 3 business segments over the past 3 years. And they are actually in a strong position to weather the COVID-19 pandemic. And of course, at the bottom, they also mentioned about the continued expansion and that there will be some big venture going on. So in fact, they're actually planning for more acquisition. All right, they're actually planning for more acquisition for this particular business. All right, so this is actually one of the latest news. Okay, Union Gas is actually planning to buy the LPG business from the parent company, Union Energy. So like what I mentioned, Union Energy is actually owned by the same family. So there's of course a lot of conflict of interest but of course that is where I would say that this particular buy over would actually make things a lot clearer in the future. So you can see that they actually put down the rationale for the potential acquisition. In fact, this was just released about 1 or 2 weeks back only, just very, very new. So this acquisition is not confirmed yet, but just by looking at this, I state down 3 very important points. So for the acquisition, it would actually substantially increase the base of the commercial as well as the industrial customer. The second point is it will achieve greater efficiencies through the vertical integration of its supply chain, right? Because right now, Union Gas is actually getting all the oil, all the gas canister and all the gas actually from the parent company, which is not a listed company. So actually by integrating the parent company into the listed company, it would actually means that the whole supply chain would under be the listed company. So that will make things a lot clearer as well. And of course, for the last one, with everything under one listed company, there's also more opportunities for the group to expand in its business in the future as well. So this is also stated. So like I said, just to summarize in terms of this acquisition or rather potential acquisition, I would say that this could be a good thing as the whole business can be vertically integrated and it gives the investor more control on the supplier. So what happened right now is that, can you imagine if let's say, the parent company decided to increase the price. So the listed company, they have no choice but to accept, so it's like there's a lot of conflict. It's like your father say, oh, because you're not a good son, so I'm going to increase the price of the gas and I'm going to supply you at a higher rate. But the son is managing a listed company. You can't just control this kind of issue. So however, if the son, or rather, if the listed company actually acquire the whole parent company, so that makes things a lot more straightforward, whereby the whole business is now all under the listed company. So I would say that this is definitely something that is good. And with this, actually, it's easier for the business to expand moving forward as well. So a lot of people will also be concerned about COVID-19 and how COVID-19 would actually affect this business. Okay, so here's 4 key areas. So number 1, this business is in the essential services. So it doesn't affect at all. Business operates as per normal during COVID-19. And that's actually a good point because more people are staying at home during the lockdown. So the LPG sales to household actually grew. Okay, but of course, on the other hand, for the hawkers, for the restaurants, business are affected. So the commercial and industrial LPG sales actually suffered. So in terms of the oil prices, so people are also worried about what is the impact of falling oil prices. So this is what the management actually mentioned. They mentioned that the LPG is not pegged to the crude oil price. However, a decrease in the crude oil price will result in a decrease in the purchase price of the compressed natural gas and diesel. So that again means there is possibly higher profit for the company in the midst of a falling oil price. So now coming to the financial fitness, which is actually one of the key reasons why I actually find that this is one of the better company that we can find in Singapore. So once again, for the 7 checks, we will go through the growing revenue, positive earnings per share, growing free cash flow, ROE above 15%, net margin more than 10%, interest coverage more than 5, and lastly, the dividend yield more than 5%. So let's look at this. We can see that from the revenue itself, definitely this is a pass. All right, so the revenue is growing. Then we look at the earnings per share, it is also positive as well. So that's also another tick over there. Looking at the free cash flow, we can also see that there is growing free cash flow. So far we have actually all 3 ticks. And moving forward, we can see that the ROE, we are looking at above 15%, and this company actually performed at a rate of 29%, which is amazing. Next, we look at the net margin of this business. Okay, we are looking at more than 10%, and marginally, they actually managed to pass it at 10.68%. And looking at the last one, which is the interest coverage, this company has very, very low debt. And that is why in terms of the interest coverage, it is very, very healthy at 130 times. So lastly, we want to look at the dividend yield for this particular company. So based on the last year, or rather the latest declared dividend for this company, which is actually very, very recent. they are actually giving a dividend of 0.0155. And so if we actually take the dividend yield, dividend per share divided by the current share price, okay, this share price is actually extracted today as well. You will see that right now the dividend yield is giving 5.08%. All right, 5.08%. So of course, with the current share price, if let's say the following year the business actually do better, they distribute more dividend, you should be expecting more than 5% dividend yield. So in this current case, we can see that the dividend yield will definitely be fluctuating depending on the business. But moving forward, I would say that this is quite a defensive industry, in the utilities and gas, and with the business segment in the diesel, which is a growing industry, as well as their new business segment into the retail and commercial, I do see that this company will continue to grow probably somewhere around 10 to 15%. Right. So this is definitely a pass as well. So to summarize, we can see that everything is a pass for this particular company. And so just to summarize the good point and the not so good point for this company, okay, starting with the first one, I would say that the retail and commercial LPG business is expanding and they are growing at a good double-digit rate. So that is definitely a good sign. The second thing is the company financials are amazing. In fact, even the net margin is also increasing as well. Right, so all this is actually done due to synergistic acquisition. And the company did mention that due to the recent acquisition, it did affect the margin. So the margin is actually lower. But after some couple of years, the margin should actually become even better. Once they actually manage to merge all the the workforce and all the assets together, the net margin will increase and become even better moving forward. And of course, the last one is that there's a high management stake in this company. So it would ensure that the management are aligned with investor interest. So I would say that in terms of the insider management, they are holding more than 70%. That means the CEO and the chairman, and of course some of the brother and sister, they own more than 70% of this particular company. So they would of course definitely want the business to do well so that the share price will do well as well. And of course, looking at the not so good point, I would say that the related party transaction can have some conflicting interest. So that is why I term this as both an opportunity as well as a risk. The second point is that more competitors are entering the diesel business, and that can actually lead to lower revenue in terms of the diesel business segment. And lastly, government regulation on gas and oil prices can have a direct impact in this particular business because they are in the utilities. And as we all know, the election is coming. So after the election, anything can happen. The government can actually fix certain prices, change certain law when it comes to utility prices. So these are very, very sensitive topics. So bearing all this in mind, all right. So I have a decision already, but I want to hear from you guys. So what do you guys think about this company? Is this going to be a buy BUY or is this going to be a buy BYE? Can you put it into the chat group? Can you put it into the chat group? If let's say yours is a BUY, can you just type in BUY and can you help me to smash the heart button as well? All right, and if let's say you are a BYE, can you just type in BYE and help me to hit on the angry button? If let's say it's a BYE, hit on the angry button. If it's a BUY, hit on the love button. Okay, I see one buy, I see two buy, I see one. Serene said BYE. Albert is also a BUY. Okay, most of you guys actually mentioned BUY. All right. Okay, let me just wait for a little bit more response from the crowd. Okay, and of course, for myself, what is my answer going to be? I think without a doubt, okay, if you guys have been following me based on, by now you should know what is my answer going to be. So I would say that definitely for this company, looking at the financial, looking at the prospect, and most importantly, the dividend yield is something that is attractive and undervalued right now. I will definitely give this a BUY. Okay, this is definitely a buy. All right, so with that, all right, I end off my particular session for buy or buys today. I hope that you guys actually learned something from this particular series. Once again, this will be uploaded onto our YouTube channel as well as on our Facebook group as well. So make sure you follow and like our Facebook page. And of course, for those of you who are not yet inside our Telegram, you can actually go to our Telegram at t.me/ultimateinvestorsg. And of course, do subscribe to our YouTube and like our Facebook page. Okay, with that, I'm going to sign off today. I hope you guys have a wonderful weekend. This is a long weekend, so have a long weekend ahead. And of course, most importantly, stay safe, invest safe, and I'll see you guys, in the next video. Oh, okay, there's some question. Let me take on some question first. Is there a small market cap and catalyst listing limit their growth? Oh yeah, yes, this is a catalyst listing. So that means they are on the secondary board. So I wouldn't say that that is a bad thing. It just simply means that they are relatively smaller. But they did mention that as sales continue to grow, as business continue to do better, they are considering moving towards the main board. Okay, and based on the kind of growth and based on the kind of profit that we are looking at, I would say that there's a high possibility that, in a couple of years, they will be shifting up to the main board. And of course, the advantage of being on the main board is that the cost is actually lower, because when you are a catalyst, when you are in the catalyst listing, you actually have to pay a certain fee on a yearly basis. So once you're on the main board, the cost is actually lower, right? So definitely this is a good thing, and yeah, I mean, I actually like this business because this is something that is something that we can see, and I think that whether you like it or not, whether you COVID or not, people are going to use the gas, and unless the government is actually creating a new player to actually dominate this market. But at least for now, I do see that Union Gas is actually dominating the LPG market, and they are constantly expanding. And once again, in this particular area, they have the financial power because they are one of the only listed company. So I would say that moving forward, some of the few things that they will do is definitely more acquisition to increase their market share. And yeah, with that, I would say that that is something that is going to be exciting for this particular company. Right, so that's all from me. So once again, thanks everyone for coming and tuning into our Buy or Buy series. And I hope to see you guys in our next Buy or Buy series this coming weekend. Right, so see you and bye-bye.